You have until the 15th of January 2026 to stop a penalty dead in its tracks. But if you wait one more day, that safe harbor doorway slams shut. What most W-2 employees with side hustles don't know is you can legally fix a whole year of underpayments in minutes without signing up for EFTPS, without waiting for a late 1099, and with paperwork that survives an audit. Stick around. The single fastest move and the exact script to give payroll are coming up in 90 seconds. This is a last-minute January tax playbook for W-2 employees who also run side hustles. Today, you'll get a step-by-step guide to the fourth quarter estimated tax move you must make by 11:59 p.m. Eastern on the 15th of January 2026. Plus 3 practical scenarios: low, mid, and high side hustle income, exact calculations to hit safe harbor, the payroll script to give HR that actually works, how to submit a last-minute payment using Direct Pay or EFTPS, and the checklist of records to snapshot now so late or mismatched 1,099 seconds won't hurt you later. Quick disclaimer before we dive in: this is educational only, not legal or tax advice. Rules change. Consult a tax pro if you're unsure. The deadline you need to know is the 15th of January 2026. That's the due date for the fourth quarterly estimated tax payment for the 2025 tax year. If you underpaid across the year, the IRS can charge an underpayment penalty, but there are 2 common safe harbor routes to avoid that penalty. Either you've already paid at least 90% of your 2025 tax bill via withholding and estimated payments, or you've paid 100% of your 2024 tax liability. If your 2024 adjusted gross income was above a higher threshold, that 100% safe harbor bumps to 110%. Check the IRS publication 505 for the exact AGI cutoff for 2025, because that dollar threshold can change. Farmers and fishermen have a different safe harbor at 2/3. So what's the play if you're under? Make a timely Q4 payment on January 15 that closes the gap, or increase your W-2 withholding now so the withholding is counted as if it happened evenly across the year. Yes, increasing payroll withholding in January often beats EFTPS enrollment for speed. Here's the twist. If your employer withholds extra federal tax in January, the IRS treats that additional amount as if it had been withheld evenly over the entire year when they test the safe harbor. That single trick can eliminate months of underpayment penalty exposure instantly. Let's walk through the exact calculation so you can do this in 10 minutes. First, estimate your 2025 total tax liability. Start with last year's return and adjust for known differences: increased self-employment income, reduced expenses, or large capital gains. If you don't know your final number, a conservative approach is to assume your tax will be 10 to 20% higher than 2024 if your side hustle grew. Second, add up payments already made for 2025 year-to-date withholding shown on your final pay stub, plus any estimated payments you already made in April, June, and September 2025. Third, compare 2 lines: 90% of estimated 2025 tax versus 100% of 2024 tax, or 110% of 2024 if you hit the high income threshold. Whichever number is lower is usually the easier target to hit. Concrete example. Suppose your 2024 total tax was $8,000 and your 2025 estimated tax liability is $10,000. 90% of 2025 is $9,000. 100% of 2024 is $8,000. If your year-to-date withholding plus prior estimated payments equals $7,200, you need an additional $800 to hit the 100% prior year safe harbor, or $1,800 to hit 90% of the current year. Important note, if your 2024 AGI was above the threshold, the prior year safe harbor might require 110%. In that case, replace 8,000 with 8,800 in this example. Now, what about 1,099K chaos? If you're waiting for 1,099Ks from processors, the last few years have been a mess. Thresholds were changed, phased in, and sometimes delayed, and legislation shifted enforcement. Bottom line, don't wait on a $1,099K to calculate taxable income for your estimated taxes. Use your business records. Snapshot these items today. The more contemporaneous and time-stamped, the better for an audit trail. Platform sales exports showing gross receipts, fees, and refunds. Monthly bank statements showing deposits. Invoices and receipts for business expenses. Mileage logs or app screenshots for business miles. And a dated income reconciliation spreadsheet that ties gross sales to net profit with supporting PDFs or screenshots attached. Make sure the files have metadata or save screenshots with a visible timestamp. If a 1099 arrives later with mismatches, you'll have documentation to support your reconciled number and explain differences. If you act now, you reduce the penalty and create an audit-ready file. That's a double win. Next, 3 real scenarios, low, mid, and high, with exact dollar moves you can make right now. These are examples. Do your own math with your numbers. Scenario A, low side hustle. Assumptions. 2024 tax equals $4,000. Estimated 2025 tax equals $4,800. Year-to-date withholding and payments equal $3,700. 90% of 2025 is $4,320. 100% of 2024 is $4,000. You need either $300 more to meet the prior year safe harbor or $620 more to reach 90% of 2025. Payroll hack. Request a flat additional federal withholding of $300 in January, or request a W-4 change that results in $300 extra withheld by the next pay date. That counts as paid evenly for safe harbor purposes. Scenario B, mid-side hustle. Assumptions. 2024 tax equals $8,500. Estimated 2025 tax equals $11,000. Year-to-date payments equals $7,000. 90% of 2025 is $9,900. 100% of 2024 is $8,500. You need $1,500 to reach the prior year safe harbor, or $2,900 to reach 90% of 2025. Choose the smaller, $1,500. That can be covered by either a single direct pay estimated payment or increasing payroll withholding by $1,500. Ask HR to withhold an extra $1,500 in January, or use IRS Direct Pay to pay $1,500 as an estimated tax payment for 2025. Scenario C, high side hustle. Assumptions. 2024 tax equals $25,000. Estimated 2025 tax equals $40,000. 2024 AGI was high, so prior year safe harbor requires 110%. 110% of 2024 is $27,500. 90% of 2025 is $36,000. Year-to-date payments equal $20,000. You need $7,500 to hit the 110% prior year safe harbor, or $16,000 to hit 90% of 2025. Choose $7,500. For large numbers like this, use a split strategy. Increase payroll withholding as much as possible in January and make a direct pay or EFTPS payment for the remainder. Want the exact language to hand over to HR so they don't ask a million questions? Here's a copy and paste ready script you can put in an email or the payroll portal. Include your employee details and the last 4 digits of your SSN so payroll can verify your identity and edit the numbers. Email, text. Please update my federal income tax withholding for 2025 as follows. Withhold an additional flat federal tax amount of $X on my next paycheck, or withhold $Y per pay period if the employer needs a recurring amount to be applied to federal income tax withholding. This additional withholding is requested to meet safe harbor tax payments for tax year 2025. Please confirm in writing the amount that will be withheld and the pay date it will occur. If you prefer W-4 changes, ask payroll how the change will affect year-to-date withholding and get written confirmation. Some payroll systems let HR adjust year-to-date withheld amounts manually, request that if you need a large lump sum withheld immediately. Why this works: extra payroll withholding counts as if it were paid evenly across the year when the IRS compares payments to the safe harbor. That's the key legal mechanism that lets a late January payroll move cure a year of underpayment. But employers sometimes refuse large year-to-date adjustments for policy reasons. If HR balks, make a direct pay estimated payment and then follow up with payroll for smaller ongoing adjustments is less than #0.